We now move on to take a closer look at the institutional adoption of crypto derivatives, crypto and the opportunity in derivatives. And with me today to discuss this is Guillaume Chatain, who's Head of Institutional Sales for EMEA at Coinbase. Guillaume, welcome. I want to begin with the demand. In terms of the crypto trading and associated services, where have you seen the most demand from your client base?
Hi, Will. Thanks very much for having me. Just before I answer this question, it's worth giving a bit of context about the formation of crypto as an asset class. So over the last 20 years, new markets have been created and adopted by institutions. We're talking about FX, treasuries, credit, EM, commodities, derivatives, structured products, and so on. Typically, it takes around 3 to 5 years before clients and their banking and trading partners all adopt a new vertical. But in 2021, crypto markets compacted a 5-year into a 1-year cycle. The end of 2020 kicked off an institutional onboarding year in 2021 as traditional finance participants started to engage in crypto ecosystem in earnest. Institutional clients' volumes basically 10x as they traded $1.1 trillion in volume in cryptocurrency on Coinbase, up from $120 billion the year before. So now to answer your question, I would say every type of institutional investors have been very much involved in 2021, and each for their own reasons. So let's start with hedge funds, which are the primary users and who are using our flagship prime brokerage services to create, maintain, and refine their edge in generating alpha. The second bucket is VCs. They continue to deploy capital in the crypto economy as digital assets and blockchain technology are increasingly viewed as providing uncorrelated returns. The flows are driven mostly by LPs and asset owners who are looking to allocate to growth investments in a low yield environment. The next bucket, family offices, they enjoy lower regulatory and shareholder obligations compared to institutions. And that enables them to be more future forward and seek higher growth strategies. I would say that they were the earliest entrants to crypto as long-term investors. And this was also driven by the next generations that are more open to crypto and digital assets than their parents. Now, to a lesser degree, I would say asset managers who are the gatekeepers of roughly 200 trillions of capital. Their investment mandates and fiduciary duties are unfortunately requiring much longer due diligence. So adoption is taking time with this group. And it's, however, a question of when, not if. And at Coinbase, being a publicly listed company, we're playing a huge role thanks to a very robust suite of products and services for this micro segment. Finally, the last segment is about corporates. Very different is not necessarily about investment, but the utility function of digital assets beyond the investment aspect of tokens resonates very strongly with them. Use cases such as merchant payments, treasury management, and NFTs to better engage with their clients and fans are a proof that this segment is re-entering as an early adoption phase.
Interesting. Why now? Why are you seeing the most uplift now?
Well, the short answer is it generally pays to be early. And we are also witnessing the formation of a completely new asset class. For context, when you look at a fully formed asset class in finance, you have 5 important parameters in place. Number 1 is a large diversity of institutional clients that is often complemented with active retail participation. A functioning marketplace with liquid spot and derivatives as well, with service providers that have scalable infrastructure. And finally, sufficient regulatory clarity to operate. Now, the reality is that we have made very good progress on many of these aspects in the recent past. And that is comforting investors that we are still early, but crypto is here to stay. I have a few numbers to give for context. There are roughly 900 crypto asset managers that are managing 70 billion in AUM. Largest asset manager in the crypto space, Grayscale, is working with other large ETF providers and advocating for a spot ETF. On the investment banking side, we have Goldman Sachs, which is trading NDS with their clients. JP Morgan also launched their own digital coin. And I understand that they are using it to facilitating repo financing activities. On the private banking side, the largest private banks are offering managed crypto exposure to their clients, while challenger banks such as Revolut and SoFi, for instance, are offering direct exposure to crypto. Now, to complete the picture, the largest custodians in the world, such as BNY Mellon and State Street, are getting involved. There are payments use cases that are expanding rapidly, and traditional players are starting to lend against crypto. Finally, the last point around derivatives, we start to see on the regulated futures on CME that are becoming much more active than they were.
Interesting. And what have been the landmark moments that you've seen and thought this is really accelerating the progress here?
It's I think it started with what I liked reading was the white paper in May 2020 written by Paul Tudor Jones, entitled "The Great Monetary Inflation." He was making a very compelling case for owning Bitcoin. A few months later, in July 2020, the OCC in the US unveiled crypto guidelines for banks and basically opening new opportunities for banks to participate in the crypto ecosystem. And this was followed by major transactions. MicroStrategy allocating more than $2 billion in BTC, followed by Square. Shortly after, who I call the greatest of all time, Stan Druckenmiller, announcing that he's long Bitcoin. And I could give a much longer list, including MassMutual, Tesla, Bill Miller, and many others. But the list would not be complete without mentioning Coinbase direct listing in April 10, 2021, and its direct access to the debt market, raising more than $2 billion through a 10-year bond in September last year.
Interesting. And we've seen big adoption, but also several challenges that firms have in getting involved. But what are the major challenges that the institutional market faces in terms of adopting crypto?
Yeah, there are various challenges, and I would sum it up as practical challenges around scaling. So it starts with the education and operational due diligence, and this takes time. For example, it's easy for us to onboard a family office that can just be onboarded in a couple of days and purchase $100 million of crypto at the same time. But it's a very different ballgame with large banks and custodians who have at times been in due diligence mode with us for more than a year. Also, getting compliance and legal officers comfortable with AML, KYC, and business practices in the crypto space takes quite a lot of time. At a different level, we have challenges in terms of integration of crypto into traditional risk capture and booking system. It is still taking time. I would say that the crypto tech for interaction and user interface is quite advanced, but the backend risk modeling, P&L, and booking systems largely don't exist at this point in time. And finally, very important one, there is still a lack of clear and accommodating regulation. And that has held back a few players. So the best example is banks, who have a very punitive risk capital model, which effectively stops them from ever having spot exposure to their balance sheet. As you know, tax and accounting models are being refined. And in Europe in particular, I would say there is a lack of regulatory harmonization. And in general, Europeans are behind their US counterparts in terms of crypto literacy rates.
Interesting. And in terms of the performance and the uses and impact on the institutional market, does crypto act as a hedge these days compared to traditional asset classes? And how's that trade evolved over the last 3 to 5 years?
Yeah, the way I'm looking at crypto, and I can take Bitcoin as a proxy for other crypto, is that we have two components in crypto. The first one is the store of value of an asset that has limited supply, is super secure, very liquid and portable. And the second one is the technology component of an asset class that is still in the growth phase of adoption and somewhat correlated to high beta tech stocks in the short term. So we definitely can acknowledge that the correlation between crypto and traditional assets has picked up over the last 3 months. And this is because of a convergence of various factors that affected risk performance globally. The invasion of Ukraine, quantitative tightening by central banks, and so on. But even when accounting for these different risks, we see that Bitcoin 40-day correlation to tech stocks actually peaked at 70% since 2016. If we take the average since the second half of last year, the average correlation is closer to 25%, which is statistically small. So just to say that correlation are still historically low, for the most part driven by factors that are different between the one that drive crypto and the one that drive traditional assets. So this is precisely why I believe crypto is a hedge in a portfolio.
And to what extent is it seen as a serious alternative to a traditional asset class among institutional investors?
Well, first of all, I would not call it like an alternative, but rather another asset class to consider in order to manage a well-diversified portfolio. As I said before, crypto tends to be driven by new technology, security protocols, supply factor, liquidity, market adoption, and regulatory developments. Stocks and bonds are different. Stocks, for example, are driven by economic activity, dividends, risk-free rate, tax incentives, and bonds are driven mostly by inflation rates, etc. Over time, we're seeing that the correlation to traditional markets is increasing, and that's a good sign because it's basically saying that blockchain technology is becoming more mature and less of an early stage investment opportunity. But as you know, in general, the only free lunch in finance is diversification. Well, maybe that was before airdrops were invented. But overall, I'm still a very firm believer that crypto should have a role in any well-diversified portfolio.
Interesting. In the last few weeks, I guess it's been a non-volatile asset class to put your money in almost.
Yeah.
In terms of the derivatives market, how are institutions using derivatives today, and what's the opportunity for Coinbase that you identify with your upcoming push into that market?
Yeah, let's just start with a disclaimer. Coinbase currently only offers spot trading to its clients. It is, however, public knowledge that we have applied to become a FCM, which is like Futures Commission Merchant in the US, and that we recently acquired a platform called FairX, which is a DCM, regulated as a DCM in the US, DCM being direct clearing member, registered with the CFTC. And this FairX platform is going to become basically what is going to be the formation of Coinbase derivatives. So it's not available yet, but it's telling you that crypto derivatives are coming on Coinbase at some point in time, in the not too distant future. So the thing is, like, I cannot talk about like direct experience with clients about crypto derivatives, but I can say that in general, institutions are using derivatives in crypto in the same way it's used in traditional finance, mainly risk management, capital efficiency and use and leverage, structured products in order to tailor return to a specific view, but also for some clients as access products when they're unable to trade spot. And there's also the very famous trade that a lot of institutional clients have been doing over the last couple of years, which is the carry trade, cash and carry trade between spot and futures.
Interesting. And looking to the future, how do you see the institutional investors' interest in crypto evolving on a kind of 1, 5, and 10-year horizon? And what factors do you think will drive that?
Well, the sure thing is that the crypto economy is still in its very early stage. But it's also very clear that every year, more and more economic activity will take place on crypto rails. We're seeing crypto quickly mature from its initial use case of trading Bitcoin to the trading of hundreds or now like thousands of new assets. And there's also the adoption of new use cases like decentralized finance, being able to borrow, lend, and using protocols directly, NFTs, smart contracts, and decentralized autonomous organizations. Now, as you know, the crypto industry is changing very rapidly. And what we can predict is that the products that are the most crypto forward, people are using today, will be used by mainstream customers in a year. And it's probably going to be followed by institutional in a few years after that. Maybe I can give you some examples and themes to pay attention to. The first one is we're going to evolve in a multi-chain future. Alternative L1s are not going away, but we're probably more likely going to see composability across different networks. Also, something that is going to be important to look at is prioritizations. Users may be valuing some aspects of a blockchain compared to others and prioritize their L1 options on the basis of those concerns. Just one example, transacting for $10 may favor speed as the biggest concern. But if you want to transact for $1 million, maybe you want something much more secure and have a transaction directly on the base layer. Other aspects that are going to change, I think the market for financial services is going to change for the better. In terms of cash movements via stablecoins, for example, this will enable immediate and super cheap transfers 24/7. In terms of financial inclusions as well, in particular in emerging market countries, where stores of values can be limited, there will be a massive improvement in payment settlement rails globally as well. So these things are going to really change for the better. On the longer term, I can think that stablecoin use cases, stablecoins being a $130 billion market at the moment, stablecoins use cases are going to explode. For example, on the supply side chain, we may see integration of blockchain technology into supply chains for instant settlements. This will enable mutual claims to be just like paid immediately among the different parties, talking about like suppliers, buyers, transporters, agents, workers, and so on, all automatically. Another very important example in the bond market, we may see blockchain technology being used for bond settlement at scale. Imagine when smart contracts will be built into bonds. Regime change will not affect payments, credit risk premia will be compressed, borrowing costs will be reduced, intermediaries that are expensive are going to be removed. It's going to be much, much more efficient than it is today.
Interesting. And how do you think that in turn will evolve in the retail market in terms of their engagement? Do you expect that to lessen as it becomes more institutionalized?
I think the retail market is really going to benefit from what is going to happen in the stablecoin world. Being able to transfer cash from one place to another directly from your mobile phone, instantaneously 24/7, not having to pay like all these big fees. Is going to be like a big difference. The other thing, and it is one of the reasons why Coinbase exists as part of our mission statement, is increasing economic freedom in the world. And I think retail in general, being able to be your own banker, having just like a mobile phone and being able to transact, being able to save, being able to custody your own assets, is going to just like make life for a lot of people, especially in emerging markets, much, much better.
Fantastic. Finally, in the last minute of the call, what aspect of institutional investors we discussed in getting into crypto excites you the most today?
There are two important, just to keep it short. Number one is NFTs, and number two, tokenization of financial assets. For NFTs, it's like really interesting to see the number of like very big household names, corporates who are in discussions to enter the NFT space. If you remember late last year, Adidas was tweeting about partnering with Coinbase as one of, and it was one of their most ever liked tweets. I can say that like we're in discussions with so many brands that many other big brands are following. And we actually have like a full suite of products and services to engage them and help them just like do that efficiently. The second aspect, tokenization of financial assets. This is a longer term vision that is going to require higher throughput and lower latency of blockchains. And that will make capital markets much more transparent, much more efficient, as settlement and payment will be immediate and secure, and be removing like a lot of friction and the need for costly intermediaries.
Fantastic. Okay, we're up against time, and we could have talked all afternoon, I think, but that's been a fascinating overview of what Coinbase is doing and the growth of institutional investment in the space. So thank you ever so much for your time, Guillaume.